We hope you like this episode of the Auxano Global Services podcast, in which we cover current topics in digital marketing, including online, mobile, and gaming app development, as well as the newest developing technology. Listen to the Auxano Global Services podcast, rate it 5 stars, and sign up for updates if you want to be the smartest person in the room. In this podcast, we will explore the difference between DeFi and CeFi. There is no actual trading happening on the decentralized exchange. The whole process is carried out by automated programs developed on blockchain technologies. In addition to this perk, a decentralized monetary system is one in which all members of society may confidently and openly engage. Luckily, those without bank accounts may benefit from banking and financial services thanks to blockchain technology. The DeFi project's objective is to build a decentralized, permissionless, and fully transparent environment for the financial services industry. Asset storage, crypto lending, yield farming, and borrowing and lending money are just some of the services made possible by the decentralized financial system. The benefit of using DeFi over CeFi is that you, and only you, are responsible for safeguarding your wallet's private key pair. Furthermore, users who want to participate in DeFi need to access DeFi services via decentralized applications, dApps, developed on blockchain platforms. Just what makes DeFi different from CeFi? Even though DeFi and CeFi are dissimilar in several ways, customers must still decide whether to trust a machine or a fellow human being. Those who rely on DeFi do so with complete confidence that the technology will perform as promised and help them access the needed services. Those that use CeFi, on the other hand, are putting their trust in the hands of a business's personnel to responsibly manage their funds and offer them the best possible service. Customers may choose from a wide range of cryptocurrency-related financial services from DeFi and CeFi. So that we can make an apples-to-apples comparison, let's discuss the features and capabilities of both ecosystems that set them apart. Distinguishing features of CeFi's centralized trading platform, CEX, uses deposit funds into an internal account for the exchange to manage when utilizing a standard cryptocurrency exchange like Binance, Kraken, or Coinbase. Although users' cash may be kept on the exchange, they are not physically in the user's control and are thus vulnerable if the security measures the exchange has put in place are breached. Centralized exchanges have been the target of several malicious efforts to compromise their security. Customers that utilize centralized exchanges believe that these companies can be trusted. Thus, they are eager to provide personal information and entrust their assets to them. It's also common for large markets to have dedicated customer service divisions operated by knowledgeable agents. When a company has top-notch customer service, customers feel safe and confident that their money is in good hands. Fiat cars. Conversion flexibility. Centralized providers offer excellent customization options when exchanging conventional currency for Bitcoin or vice versa. Although a central bank or other trusted financial institution is usually required for exchanging Bitcoin for fiat currency, decentralized economic infrastructure, DeFi, providers may provide a more flexible array of fiat options. The streamlined onboarding procedure for new customers into the centralized finance (CeFi) ecosystem has the potential to enhance the entire customer service they get. Multiple chain services CeFi services enable the buying and selling of Bitcoin, Litecoin, Ripple, XRP, and other cryptocurrencies built on blockchain networks. Due to the delay and complexity of executing cross-chain trades, these currencies are not supported by DeFi services. CeFi can address this issue since it takes physical possession of cash from various retail outlets. CeFi has a significant edge since several of the most regularly traded and biggest market cap currencies exist on separate blockchains and don't implement interoperability standards. Defining features of permissionless DeFi. DeFi is open source. Thus, anybody may use it. Before receiving services from CeFi, users must complete a Know Your Customer (KYC) process. Users may use their personal information or cash as part of this operation. Users can access the services by utilizing a wallet without disclosing personal information to DeFi or making any initial monetary deposits. This is because DeFi is accessible to everyone and does not favor any group. Further, anybody desiring to construct on top of a decentralized platform may do so at their own will. It facilitates easy access and encourages community members to work together to promote the creation of goods that may complement one another. The DeFi ecosystem encourages the growth. Thus, DeFi's wares are sometimes referred to as monetary Legos. Trustless. Perhaps the most significant benefit of utilizing DeFi services is that you do not have to have confidence that the supplier will provide as promised. Users may check if DeFi services are running as intended by inspecting the service's source code. They can utilize third-party tools like Etherscan to ascertain whether or not a transaction was completed correctly. Constantly emerging new ideas. One of the significant advantages of a decentralized financial system is the rapid rate of innovation it enables. The capabilities of the decentralized finance ecosystem are constantly being developed and improved upon. The DeFi industry's shift in emphasis from building blocks to finished products has resulted in a robust ecosystem rich in groundbreaking financial products. The centralization of financial services has been successful in specific sectors. Thus, decentralized financial technology (DeFi) experts have been developing new solutions to get around DeFi's incapacity to facilitate the transfer of incompatible cryptocurrencies like Bitcoin. For example, there are alternatives like TBTC and WBTC, which are compatible with decentralized protocols, and which serve as tokens whose value is tied to the price of Bitcoin. This is useful for getting over the restrictions of DeFi. Because of this feature, DeFi users may have access to Bitcoin via DeFi instead of using the token directly. Conclusion: both centralized and decentralized monetary systems strive toward the same result. They hope that by spreading the word about cryptocurrency trading, they can boost trading volume. However, how these two ecologies accomplish their aims is radically different from one another. CeFi ensures both the security of your funds and the integrity of your monetary transactions. The trading of cryptocurrencies is open to traditional currency traders as well. Moreover, unlike DeFi providers, CeFi exchanges provide customer support services to their clientele. Alternatively, DeFi intends to rid the region of any invasive species. Their investors may put their ideas into reality without being limited by going via an intermediary. There are many benefits and drawbacks associated with each of these models. It is contingent on the investor and the requirements they have. DeFi is the best choice to maintain a balance between private and public conversations. If, on the other hand, you place a higher value on trust, the sharing of risks, flexibility, and expanding your range of investment possibilities, you should go with a CeFi. Stay tuned.